Well, we just got through shooting an incredible video with an expat tax accountant. And boy, were there a lot of questions I had that were answered and a lot of things that I didn't know about. This is going to be really good for people to understand what the obligations are and maybe a lot of surprises about this tax. So let's check it out. Hey, JC here for Escape to Thailand. Today I'm honored. We have Carl Turner from Expat Tax Thailand, who has been gracious enough to sit down with me because I reached out to Carl because I had some questions, and some of our members from our member site had reached out to his company and was really impressed with the response that he got. And so I thought, well, this is really great. And then when I contacted you, you were so helpful. I said, you know, it'd be great if we could sit down and do a little conversation, a little interview, because I know a lot of expats now are freaking out about the tax. And there's a lot of misinformation as well that's going around. So there's some things I wanted to clear up that's been said that when I talk to you, it turns out that maybe those things aren't an issue or not applicable. And so I just wanted to get some feedback from you regarding some of those things, and also talk to you about where you see the future of this going, you know, and what are the implications. Should people be worried, not worried? And so we only have we don't have a lot of questions, but
well, I'm here to help. So as many questions as you've got, I'm here to help. Really reassure people that they don't need to worry. The majority of people don't need to worry, and for most, they either don't have to do anything, or it's just an administration issue and it's not a big tax burden.
Cool. Well, we'll get into that. One thing I wanted to mention was there was an article, a newsletter article that said ignoring, and this was on your site, ignoring Thailand's new tax rules, is it worth the risk? And so that sort of should be where we should start this out, because I think a lot of people think that, and I initially had that impression as well. I'm thinking like, well, what happens if I don't do anything? You know? The way Thailand as a country is, they don't have databases that are connected and all these different things. And I'm thinking, well, unless they come and knock on my door and say, okay, you're going to have to get a tax ID and do this and do that, I was just recommending to people, maybe it's not something to worry about. But this is why we wanted to get somebody that's knowledgeable here, because that might not be a good strategy. So that was the article that was written on your site, ignoring Thailand's new tax rules, is it worth the risk? So can you address that first of all?
Good question. So the Thai Revenue Department changed the rules. It was actually a departmental order. So all they did is overrule a previous ruling, and that was in September 2023. So it was something that was announced to all of the revenue departments in Thailand to say, scrap the previous ruling from 1987 and go back to the original law. So they've not actually changed the law, they've just gone back to the original rules and scrapped a previous ruling. So basically what they're doing is just follow the original law. That's how it states now. So from the 1st of January this year, 2024, what the implication is, if you are in Thailand for 180 days or more in a calendar year, so 1st of January to the 31st of December, doesn't have to be consecutive. If you come and go, that still counts. 180 days in any calendar year. Then you are a Thai tax resident. Then it depends what you do with income. So if you remit, which is a fancy word for transfer or spend, foreign source income, which is another fancy word for overseas pensions, dividends, property rental income, investment capital gains, selling a property overseas. This is classed as foreign source income. If you bring that into Thailand, spend that in Thailand, and you're in Thailand and it's remitted, it's a remittance tax basis Thailand, then you potentially have a Thai tax filing obligation. Okay. So that's basically the rule. So Thailand signed up to something called Common Reporting Standards.
That's on my list as well. We're going to get to that in just a second.
Right,
yeah.
right.
So I guess the question regarding what you just mentioned, we'll go from there, and then we'll get into some of these other issues.
Okay, yeah,
but
yeah.
When you say remit,
yes.
there was some information that was put out, and I thought it was really useful, and I started recommending to people as a strategy so they wouldn't have, so they could avoid the taxation. It was said that if you took money out of an ATM machine, that's not taxable. But when I had you on the phone and we were talking, it was like, well, no, that's not exactly right. So can you address that?
Yeah.
Because somebody said, just take it out of an ATM. That's not considered remittance.
Right, right.
Well, so can you address that?
It depends.
Oh, really?
So if you are in Thailand for 180 days in a calendar year and you use the ATM machine, well, where's the source of the money that you take in the money from? So if it's cash in the bank from previous years, and you can show that the money is not income that's been earned as a Thai tax resident, then it's not remittance and it's not income. But if you receive a pension overseas or you get rental property overseas, and then on that card is just the money from that rental income and you use that to withdraw, that is remittance. And if you use the ATM like this and you don't file, if you meet the criteria to file, then it's tax evasion. So it's really important people really understand what is the money that they're spending, where's the source of that money. That's the most important part. It's the source, not how they're using the money, if that makes sense.
Yeah, it makes a lot of sense. What doesn't make sense is how that would be determined as to when that income was derived, because to me, if it's going into a common account, all your sources of income ending up in a common account, and you've retired, some of that income's come in over a period of, it could be 20 years.
Yeah, understand.
That's coming in, and then all of a sudden you do have income coming in during that calendar year, but who's to determine when you're taking it out, say, of an ATM machine, or remitting it in a, from the transfer company wise?
Yes. So
how is it being determined as to the source of the income and the time that it was?
Understand. Yeah. It's quite simple actually, but it's up to the individual taxpayer to prove where the money's from, not for the revenue to investigate and find out. So it's up to the individual to file for exactly what they brought in, and you only need to file for assessable income. So how do we do it with a mixed account? Let's say you've got an account in the US, or it doesn't really matter what country, US, Canada, Australia, UK, it doesn't matter, and you have income being paid into there, you have cash that's been in there a very long time, you've got inheritance in there, it's a big mixed account. Well, what we do is we look at the account balance. There was an announcement in November last year that cash in the bank from pre-2024 is not assessable income. So what we do is we look at the account balance as of the 31st of December 2023. Whatever the account balance is, that can be remitted to Thailand anytime in the future without any tax implication. It's only anytime, yeah. It's only new money that's been added into that account, and then we need to look at, okay, that new money, where is it from? Is it income? If it is income, is it social security, which we know isn't taxable in Thailand, for example? If it's Canadian pensions, it's not taxable. So we've got to really look at what income it is, and is that taxable in Thailand? And how do we determine, okay, let's say you decide to draw money out from an ATM machine, you think, 30,000 baht out at a time, whatever, that's how you take the funds out. Then what we need to look at is in the account balance, using first in, first out method. So basically, whatever the balance is as the 31st of December, then we look at, okay, that's the balance that you can draw down on without any tax implication. So you can draw down from that balance. If you've had new money paid in, fine, that goes to the bottom of the pile. But if you've spent money from that pot elsewhere, that also draws down that balance. Right. So we use something called first in, first out method. If anyone has any questions about this, we're happy to help. It's really...
And we'll talk about how they can get that help as well with a free consultation. Okay, so actually what you can do is you could draw down the account to the point where when you started in December...
Yes.
And that could take a year, 2 years to go through, maybe longer than that, before you get to the new money, so to speak.
Yeah. Another way to actually fix this so that it's not so complicated to do the calculations is any new income that you get paid that you know is accessible, get it paid into a different account to what you normally use to bring into Thailand. So then you definitely know this money you're bringing in is completely non-accessible income, and this part that's in another account, if you bring that in, then you know you need to potentially file, maybe you need to use tax credits, but that one, you know that there's an implication if you bring that in. So you could simplify things and split the accounts if you wished, or you could keep it in the same account. It just means you've got to do a bit of analysis.
Aggregated causes more complications if it's all aggregated into one account.
I'm all for a simple life, so I think if you can separate them out into different accounts, wonderful.
That's a good thing to know. And for Americans, the U.S. Social Security, you touched on this already, isn't taxable because that's a part of the tax treaty, if I'm not mistaken. Is that correct?
That's right. So there are 61 double taxation agreements signed between Thailand and other countries.
61?
61,
wow.
yeah. So on our website, we've researched them all. All the information's on there for different countries. With the US-Thai DTA, there's actually an exclusion, an exemption on there for Social Security, which actually means it's taxable only in the US or potentially taxable in the US and not in Thailand. So you can, if you only have Social Security, you can remit the money into Thailand. You don't need to file. You don't need a tax ID number. You don't need to worry if that's the only source of your income.
Now, when it said, I think it said actually most civil service pensions are also exempt.
Yes.
Would a military retirement pension, say somebody was in the Navy and retired and they get a pension from the Navy, does that fall under the same guidelines as the Social Security because they were, is that considered civil servant or not?
Yes, correct, yeah. So it's a government pension.
It's a government.
So, for example, most countries with the DTAs, the double taxation agreement, I think all, have an article which explains government services, government pensions. You've got to be careful though, because some pensions are called government pensions, but they don't qualify. But it's got to be civil service, military, these types of pensions are usually excluded. So if you have a military pension and you're from the US and Social Security and you have no other income, you don't need a tax ID, you don't need to file, you don't need to worry.
And what about, say, somebody in the school system? Is that considered civil service? Somebody retires as a teacher. And we have a lot of teachers that retire and come to Thailand because, again, their money goes a lot further. And so that wouldn't be taxable as well because that's considered a civil servant?
It depends on the type of pension that they've got. It really depends. We've got to really have a good look into it, into the specifics and how it's actually structured with that. So with military, police, civil service, simple. Other ones we need to look state by state how it's structured, how they are.
And that would depend on how the pension fund invested the money and where it's coming back out of, correct?
Correct, yeah.
Okay.
So it's a bit more complicated.
So that would be somebody needs to contact you all to find out and give you the particulars.
Yeah. Or potentially they could contact the pension administrators and ask them if that qualifies under the government service or government pension rather than coming to us. They could do the research themselves.
Could do the footwork.
Yeah, so they just need to if they could speak to the pension administrators and see if that qualifies. So yeah, for specifics, or they can just get in touch with us and we're happy to help. Okay.
And so when this first came out as well, you know, I was saying, you know, it's like, how are they going to know, you know, about your money and things like that? And then again, off of your website, there was a link that a member had shared with me. And this is something I also wanted you to address, and you had mentioned it briefly, and I said, we'll get to it. There's something called the Common Reporting Standard, CRS, and also Automatic Exchange of Information Protocol. Can you address those and why those are really important to be aware of.
It is, yeah, yeah. So Common Reporting Standards was set up by OECD countries, so all the usual suspects, Canada, EU, Australia, set this up, and this was after US FATCA reporting was put in place. So basically all the OECD countries saw that FATCA worked quite well, that all countries have to send all the information every year to the US for all US connected people. So they set up something called Common Reporting Standards, and now there are 120 plus countries that have signed up to Common Reporting Standards.
Wow!
What is it? It's an exchange, automatic exchange of information between the different revenue departments. So let's say you're a Thai tax resident. Thailand signed up in 2020, and last year is the first year they received the first set of data from all of the Common Reporting Standards countries. So what does that mean? It means if you're a Thai tax resident and you've got a bank account in Hong Kong, you've got a pension fund in the UK, you've got a bank account in Canada, and you also worked in Australia as well, and you've got a bank account there. Every year now, all of the accounts you have send the information to their local revenue department, and every year they compile the information and send that information online, all through an XLS file to the Thai revenue department. So they have transparency now for all Thai tax residents on all the account balances, transactions, ins and outs.
Does that work both ways? That Thailand's also informing, say, the United States on U.S. citizens of what their transactions are happening in their Thai banks here?
Yes. So with FATCA reporting, that's already being sent back every year.
Yeah. Well, we have to do as U.S. citizens what's called the FBAR.
Yeah.
And isn't that sort of redundant then, because we're telling them how much money but not transactions?
Well, yeah, okay.
So is that the distinction, the difference between saying we have an account and them getting the actual transactions of the account?
Well, all it means is they have transparency on accounts. So if they were to audit or investigate, it's easier for them to do this, but they still rely on you to self-report what your taxes are. They're not expected to do that on people's behalves, but it just means they have full transparency of what people are, how their accounts look. So it's not necessarily, it's just so that it's easier for them to keep track of, and help with tax evasion. That's the main reason why it was set up. Yeah, so it just means for Thai tax residents, if they have any accounts, pensions, insurances, investments, in any of the other Common Reporting Standard countries.
Which we could basically say, seeing how many there are, basically all expats here that are probably watching this would fall under that their activity on both ends are being monitored by both countries.
Well, the information is being relayed to that local.
Being shared.
Being shared, yes, correct, yeah.
Doesn't mean they're looking at you.
Correct,
but it is being shared. They do have it on file.
It's nothing to worry about. It just means they've got a transparent view of all Thai tax residents.
Which makes it even more important to make sure you get it right.
Yeah. I mean, it's not difficult to comply and be compliant.
So there's not disparities between what they're getting and what you're saying on your tax. Okay.
And actually, the Thai revenue have done a very good job in updating how to file. They produced documents in July to explain how foreigners can file. So the revenue's actually gone over and above what other revenue departments have when they've changed the rules. And they've actually provided us a lot of information about how we deal with this and how it actually works. So they're very helpful with ourselves. The problem is for individuals, it's a bit different. They sort of, like you mentioned, there's a lot of misinformation out there. So that's why we're trying to help explain the actual rules so people can make better informed decisions for what they do.
Yeah, and that's the purpose of the video as well, is to try and give people some good information.
Yeah.
I want to just touch on tax allowances. It says if you're married 65 and over and bring in pensions, you will have at least 410,000 Thai baht of allowances before falling into the tax brackets.
Yeah, correct.
Can you touch on that, the tax allowances? So if you're married 65 and over. Now, when you say it says married, I'm not sure if they're talking about if it makes a difference between a Thai spouse or a
Doesn't
foreigner.
matter, it's the same.
Doesn't matter.
Yeah,
Okay,
same
married,
allowances.
65 and over, and bring in pensions. We're going to
Yep.
go back to that's probably the civil service pensions or any pension.
If you bring in civil service pension, it's not taxable.
It's not taxable at
Yeah.
all.
If you
Okay,
bring in
so when
social
does this 410,000 tax allowance? How does that work?
Okay, yeah. So let's assume. Okay, let's not talk about social security, civil service, military. We know that's not taxable.
Okay.
Also, things like Canadian pensions are not taxable, for example. But let's say you've got a 401k, or you've got an Australian super, or any British pension, state or private pension.
Okay.
Just for example. Then you remit, you transfer into Thailand or spend on an ATM income that you've received since the 1st of January this year.
Okay.
Then what we do to start with, let's say you bring in, it doesn't really matter, 600,000 Thai baht from a pension fund. And in the double taxation agreement, there's no exemption for that pension. Then what we do is everyone gets personal allowances and deductions, and it all varies. So exactly what you mentioned, if you're 65 or over,
Yeah.
190,000 allowance.
Okay.
Everybody gets 60 on top of that. So everyone gets 60,000. If you have a spouse, doesn't matter where they're from, but they've got to not have an income to claim for them. So if they don't have an income
they
source,
don't have an income.
if they have an income source, they have to file separately.
Okay.
If you don't, you can claim 60,000 allowance. If you have children, you can claim for each child. Even if your spouse has children and they're not being claimed elsewhere, you can claim for those as well. If you have a local Thai health insurance, you get up to 25,000 Thai baht allowance. If you have local life insurance, you can claim as well, up to 100,000 Thai baht. That's total between that and health insurance. Then also, if you're bringing in pensions, JC, then you get another 100,000 allowance. So you can see, you can steadily build up an amount before you pay tax. So let's say you did bring in 600,000 Thai baht, and you had all these allowances. You had 410,000 of allowances. So we do 600 minus 410.
That's
We've got
what's taxable.
190, and then of that, the first 150,000 of the first bracket is tax exempt. So it actually means you've only got 40,000 is in the first 5% bracket. So the tax is minimal, very minimal.
So
5% at 40 grand.
So that deduction, standard deduction, before you hit the first bracket, also comes into play as well. Even though you've taken all these other deductions, that one gets added on as well.
Yeah, correct. Yeah, so you know,
Comes off the top.
Yeah, so for someone in that situation, it's a 2,000 baht tax bill. But there's another thing as well. If you've paid tax in another country, then we can potentially use the tax paid as a credit, depending on the country and how it looks. So
And that falls under the tax agreements.
it does. So it's
The
really
treaties.
important for people not to worry, because the reality is, for the majority of people, it's either they don't have to do anything, or they've got an administration thing to deal with rather than a punitive tax implication. It depends what they're bringing in
the
and how.
administration would be the filing. Basically.
Filing, yeah, correct. Maybe having to get a tax ID number, maybe having to file, but not everyone has to. Only if they're bringing in foreign source income, or they've got domestic income, like rental income here.
Right.
But if they're not, so for pensions, if they're not bringing in more, if they're married, then they need to bring in 220,000 baht of pension income. Not Social Security, not the exempted ones, of other pension income, before they have to file. If they bring in less than that, they don't have to file, they don't need a tax ID number, they don't have to do anything.
Okay, two things.
Yes.
One, I wanted to talk about the filing of the spouse. Is it recommended that you can, under Thai taxation, you can also file as a couple?
Yeah, you can
As a
file
married
jointly,
couple,
yes.
jointly.
So if you
That's
file
what I was looking
jointly,
for, jointly,
if you file jointly, then your spouse, they've got to have no income, but then you claim their allowance, so you get 60,000 allowance on top of your allowances, that's all.
But if the spouse has income coming in, then it's recommended they file separately.
You have to file separately,
Have
and
to.
then they use their allowances separately. So can be beneficial for them as well because they get the tax exempt amount as well. So it's, you know, there's a benefit to file separately.
And as far as a credit for having children, it doesn't matter if they're the foreigner's blood relative or it was in the came as adopted.
Yeah,
what
fine.
about if they're not adopted but they're the
from a previous marriage?
Yes.
Yes, you can claim as long as they're not being claimed by anyone else.
Okay, cool.
So you can claim for that as well. If you're married, if you're legally married, you can claim for spouse's children if they meet the criteria. So they're in education. And
when you say legally married, that would you would need a marriage certificate either from your home country showing the marriage,
correct,
or if you're married to a Thai, having the registered marriage within Thailand.
Exactly right.
Good to go. Okay, so this is something that I read and I wanted to touch upon, and I get your opinion on it.
Yes.
And I won't call out too much, but people will probably, if they're watching any of the news here or getting the news aggregate or whatever, they'll probably know where this came from and everything. But there was an article that was written and they quoted a tax expert, okay, whatever an expert is, and I won't mention their name, but they advise expatriates residing in Thailand for 180 days or more in 2024 to register and submit tax forms by the first quarter of 2025, even if they believe they owe no tax. He warned that failing to register could lead to audits and potential penalties in the future. Can you just address that, just your opinion on that statement?
I think maybe it was just a misunderstanding from. I think it was just a misunderstanding on the on how it was explained actually.
Okay.
I think it actually what they're trying to refer to if they have remitted in, if they brought in foreign sourced income. Because the rule clearly states if you don't have a Thai tax filing obligation, so you don't have foreign sourced income, you can remain in Thailand for 180 days or more, be a Thai tax resident and not have to file a Thai tax return. Only if you meet the criteria to file. So if you bring in, I'll explain in more detail. So if you bring in pension income, and you're married, 220,000 Thai baht or more, then you need to file a tax return, regardless if you have tax to pay or not.
Okay, so the distinction, this is interesting, because when you say if you have the obligation, okay, so now the obligation, if you do have a tax liability because of the type of income that's coming in, that's being remitted, but it falls under this tax allowance, so you never hit the point of falling into the bracket.
Do they have to file? They do. They have to file. So if you,
they would have to file.
Correct. If you're bringing in,
pay.
Correct. Yeah. So that's what I'm saying. For a lot of people, it's an administration issue rather than a punitive tax problem. So it's really case by case. It depends what they're bringing in. Let's say they've got cash and they're living on cash, or they've made some bad investments and they've not made a profit and they draw down on the investments, they don't need to file. They don't have a tax filing obligation. It's not like the US where we put everything down. You only put down foreign source income or domestic income. We don't put down on a tax return anything else. So what it means is for certain people, they can live here, they don't need a tax ID number, they don't need to file unless they bring in, as a married joint filer, 220,000 baht of pension income, or for other things like rental property income, capital gains from investments, selling a property and bringing in the money or dividends. That's 120,000 Thai baht. That's the limit. So they're slightly different if you're married. So, but to be honest, if you're not bringing in that much, or you're bringing in below that, then you don't need to file.
Okay, so just to be clear.
Yes.
Even if you're falling under the tax allowance, in other words, you never hit the 410,000 or whatever.
You have to file. Yes,
you still have to file. Yeah. So you still would need to follow that recommendation and go get a tax ID and file.
Correct. But if you don't,
but you have no tax liability. Correct. You just have the what you call the administrative.
Yeah. And even if let's say you have a pension and it's in a high tax jurisdiction, and you know that you don't have tax to pay in Thailand because of the tax credits, you still have to file a tax return and claim for the tax credits. So
there's the claim
correct.
the tax
correct.
credit.
Yeah.
So you don't have any credit until you claim it.
Correct. Yeah. So it's really important that people comply. It's not difficult to stay within the rules, and we have tax filing services for people who don't have tax to pay, that just need to file, all the way to people that have complicated
we'll
situations.
Talk about that at the end there, because I think this is a real important thing. To know where they fall into, like for your company, and what the price points are for these different levels of compliance. Yeah. And so we'll talk about that at the end. Yeah. But that's because that's real important.
Yeah.
So my members had a couple of questions.
Yes.
And then we'll you can comment on anything that you think is important. But my members had a couple questions I wanted to ask you. My member Brian said his wife is Thai. She's not a U.S. citizen, but she does have a Social Security number for when she was in the States. In other words, like if I took my wife and she comes over, even though she's not a resident, she can actually get a Social Security number and work. Okay, so his wife, she's Thai, not a citizen of the U.S., has a Social Security number, and she was on a green card, never naturalized. She can get credit cards and bank accounts in her name. So the question is, if she has a bank account, say in America, say like a Schwab account or something like that, and he transfers funds from his account to her account, and she transfers her funds over. In other words, it goes from his account in America to her Schwab account. She transfers those over to her Thai bank via wire transfer. How does that impact either him or her? He would not be liable, but she would. Is that correct?
It depends on the source of the money.
Oh, there you go.
So again, it really matters if are they both living in Thailand? Are they both Thai residents, Thai tax residents?
Right.
Do they both live? Yeah. So the key things is, are they both living in Thailand? If he's a non-Thai tax resident, then there may not be an issue because he's not a Thai tax resident and can do what he pleases with his income. If he does live in Thailand and he just transfers the money to his spouse and then she brings it in, it's still his liability if he's living in Thailand.
Really?
He's still that money's still being remitted into Thailand from his income. So it's complicated, right?
Really?
It really depends on if he's living in here.
I would have thought that the obligation would have fallen on her because it's really like her income from her husband.
Right, yeah. It depends. I mean, if it's a gift or how they structure it.
Good point. Very good point. I have another member who uses the gift, like he transfers from Wise, using Wise as a transfer from his account, and he transfers to his wife here in Thailand as a gift. And from what he understood, and I'm not 100% sure, it's like something like 20 million baht or something can fall in as a gift.
Yeah, so this is
how does that work?
Gifts don't fall under income tax. They fall under gift tax rules. Okay. And the gift tax limit is 20 million Thai baht per year for gifting to a spouse. Now, the problem is the devil's in the detail with gifting, because it needs to be a gift. If it's a real gift, it needs to be a gift without reservation of benefit. So that's a complicated way of saying you're not going to benefit from this anytime in the future, and it is a real gift.
Who's not going to benefit?
The person who's given, the person who's given the money away. Okay. So let's say you live with your spouse, and the money's going to your spouse's account. It's very difficult to justify that you're not benefiting from that money now or any time in the future. It's not really a good tax planning strategy because it's open to interpretation as well. Is it a real gift or is it a gift with reservation of benefit?
Yeah, to avoid the taxation.
And then it gets into the world of tax evasion. Could it be seen as you're trying to avoid tax by just sending the money to a spouse, but actually you are benefiting from that money in the future? What gift rules were really set up for was like auspicious occasions, like your children get married and things like this, not really for avoiding foreign source income being remitted to Thailand.
Right. If every month their capital that they're living off of, their finances they're living off of, are being transferred over as a gift, it would become obvious that that's not really...
Yeah. Well, also, it's really important, JC, that people get a gift document. You know, is there a gift document drawn up on that or not? You know, so if they're asked to see, where's this money? Where's it from? You know, is there a gift document drawn up? Was it done properly? Was it notarized by a lawyer? Is it a real gift, or is it just sending money via your wife? So it's complicated. It's not really a good, in my opinion, a good strategy for tax planning to be gifting money that can potentially be seen as grey. It depends what the money's gifted for. So let's say you gift to, you know, for a daughter's wedding, then that's completely separate issue. But if it's a gift where it's just to try and avoid these tax rules, then, you know, I think people should look on that in caution, to be quite frank.
Okay, and that brought up another issue. A lot of foreigners give allowance to their Thai spouse, you know, because a lot of them, their spouse has to quit a job and to hang out and to travel or do whatever it is. And so they give them an allowance. Depending again on where that money came from and when it came, for the foreigner, is there still an obligation for them, even though they're just giving this as... See, this is the thing. Yeah. Is it a gift? What is that?
Well, if they are remitting the money into Thailand, it doesn't matter if it goes to, if I send the money to your account, or I send it to the school, or I send it to the landlord's account, or a car showroom. Ooh. I'm still remitting the money into Thailand. So it's my obligation to show where that money's from. Just because it's not going into my account doesn't mean that it's not potential for foreign sourced income. So it's really important to see where the source of the money's from. That's why we go back to that original discussion about that
first in, first out. Went off, Carl, that I wasn't following, and that was the remittance. When you say remittance, it doesn't have to be remitting into my account.
Yeah, correct. Yeah.
Oh, yes. This is a major thing here. I don't know how that fell through the cracks with me.
Yeah.
So you're saying that it doesn't matter where the money is going, whether it's coming out of an ATM machine and being put into your hand in cash, or you're remitting it into somebody else's account.
Correct. Yeah. It's still you remitting
because
the funds.
It's your money coming into Thailand. That's the criteria.
Yes, correct.
That's the remittance.
Still a remittance tax basis for the foreseeable future until, if they do amend the rules to be in a worldwide taxation basis. Until that, then it's a remittance tax basis.
And we'll get to that worldwide. I have that question on your opinion on whether that's going to happen or not.
Yeah.
Okay. And so this also comes to play in, say, somebody's a foreigner, expat living here as a resident.
Yeah.
Is going to buy a vehicle and they remit the money. And even if they remitted it as a direct deposit to Toyota or something like that, that money would be taxable depending on, again,
correct,
whether it's taxable income, whether, you know, when it came in and what
exactly
income
right.
it was
so where's the source of the money? How long have they been in Thailand? Is it a taxable source or not? Can it be claimed as cash from previous years? Is it exempt? So there's a lot to look at with.
But that's critical there, that distinction.
Yeah, correct. Yeah.
So anybody thinking, well, if I just don't take it into my own account personally and it goes somewhere else, then I'm sort of flying under the radar. That's
not how it works.
Yeah, that's not how it works. Right.
Yeah.
Well, that's
it's important for people to understand the rules, and they can make their own decisions how they manage it.
Exactly.
Right?
Exactly. Okay. That's really. That was a good distinction there. Another thing, this was my question.
Yes.
And I might have the answer to it just because of what we've already said, but my question was, if someone brings the financial requirement for the retirement, the $800,000 or $400 for marriage, and deposit it before they've been in the country 180 days and become a tax resident, is that taxable income?
Yeah, good question. So if they send the money to Thailand before they are, if in the calendar year they are under 180 days, then they can remit whatever they wish into Thailand. It's not assessable income in Thailand. So let's say you move here in November, so you've not been here 180 days. You need to apply for the retirement visa. You need to bring in 800,000 Thai baht. You can bring that from any source because you're not a Thai tax resident. But let's say you moved on the 1st of January and you stayed there for the full year, and you bring in income and it was earned in January, on the 1st of January, so it was an income payment that came in on that day that you bring it across, then potentially that's taxable. But if they had cash from the previous year and they brought that in, then it wouldn't be taxable. So it just depends on how many days they were in Thailand for the year that they brought the money in, and then where was the source of the money that came in from.
The distinction is the tax year,
correct,
calendar
tax
year,
yes.
And the year
source.
Of the source of the
exactly
income.
Right. Yeah.
Those two things are okay.
So
those
for people, so really interesting. So for people that move next year, so let's say move in 2025 or 2026, then we look at the account balance at the end of the previous tax year. That's what they can bring in. And that's not taxable when they bring it in because it's earned in a previous year that wasn't a Thai tax resident.
Okay.
So it's quite, we have to look at this case by case.
Yeah.
But once you understand the rules, it's not as difficult as it first looks, to be honest.
Okay, because Matt had asked a question. I think we just answered my questions about funding the 800,000 for my retirement visa. Is that subject to the new tax scheme? And we answered that. That's okay. Cool. It depends on these different criteria.
It really does. Yeah.
One more question. This was from our member James, and he said, "Do you have any info on how to go about getting the tax identification, the tax ID?" Can you talk about that?
Yeah, I can. Yeah. So if someone has a Thai tax filing obligation, so they meet the criteria that we mentioned. Yeah. So 180 days or more, or if they have domestic income, so rental property income or salary here, they can be under 180 days and need to file. So they can
salary here.
Yeah, correct. So
income derived within Thailand
correct,
is taxable no matter what.
Correct. Yeah. So they need to get a Thai tax ID number and file for that tax year if they meet the criteria. How can they get a Thai tax ID number? So the easiest way for people is to visit their local revenue office. So the local revenue office, wherever they're registered, they need to visit there with the documentation to show that they do need a tax ID number. So proof that they have remitted in foreign source income or they've got an income, and they need the passport and some sort of address proof, and then they can apply and obtain at the local revenue office. So usually what happens is you apply and then you have to go back once it's ready, a few days later, and pick it up. So it's a 13-digit number, and then that's what you would use to file. So that's what most people can do. We also have a paid service. If people would like to take that hassle away, we can help people obtain their tax ID number if they have a Thai tax filing obligation. So they need to meet the criteria. So either have to file because they have foreign source income and they've been here 180 days or more, or they've got domestic income and it doesn't matter how long they're here for. Right. So yeah, we can obtain that on people's behalf. It's all online. They fill out the information and we can obtain that on their behalf by visiting their revenue department.
And in my opinion, seeing that they really, I would recommend at this point that they actually contact you and find out if they do have the obligation, and then at that point they'll know whether they need that ID or not. So that's the criteria first, is to know whether you have an obligation, which again we'll talk about how they can figure that out with you all's help. And speaking of that, let's talk a little bit about your company, your business. There is you do offer free consultations, and I'll put the link and everything in the description of the video how they can contact you, because there's a number of things on your website. You have an inquiry where they can put in their email address and whatever and ask a question. And this is what the member did for you all, and you all actually followed up with him, which he was real impressed. He thought he'd get an email back, like some cryptic message, but he said they were so helpful, they called up, and it was like if I'm not mistaken, I think he said it was like within hours of the email he sent. It was all of a sudden the phone rang. It was you all saying, can we help you all? And so that was really great.
So we have
you have the consultations.
We do. So we have consultations, so people can book in 15-minute call or video call. Whatever, it's up to them. Whatever's easiest for them. They can speak to one of my colleagues just to really ask any questions that they've got. We can usually clear up most questions in 15 minutes. So we can work out if they do have to file, whether they have to get a tax ID, or if they don't, then that's a good solution. If we get off the call and they don't have to do anything, then wonderful for them. And so they can book in a 15-minute call. We actually have a tax alerts section on our website, because if people want to be kept up to date with any changes, they just add their email address. We'll make sure that we keep them up to date with our newsletters, with the latest updates for the Thai tax, and we have many webinars.
That's what I was just going to mention. One of the things is if they put in, even if they go and they say, okay, well, I'll just call up or something, it's a really good idea to go put their email address in and get on that newsletter, because again, you also inform them of these webinars that you do, which are very helpful as well. And so, so you have the inquiry where they can
ask a question.
But if they do that, ask the question, will they automatically get put on that newsletter?
Yes, they do. They do. They automatically go onto the newsletter, so they can keep on getting updates. And then also, we have a frequently asked questions page where we've answered hundreds of questions on there as well. So that's quite useful for people. We can arrange one-on-one consultations if they've got a bit more. They want to ask specific questions. We have paid 1 hour service for this. If that's useful for them. And then also we have the tax filing services. So if people need to file and they know they don't have tax to pay, we have one for specifically for retirees. So which is cheap to file, easy. They can do it all online. We have a client portal. We actually have an onboarding team that can deal with one of our colleagues on the phone or online. We can do everything for them on their behalf. We try and make it as easy as we can. It's in multiple languages as well. So, for example, if they want to look at the language in Swedish, they can. It's no problem. We have in multiple languages, so we can file. We can help do everything through our client portal. So, if they are in Hua Hin, or they're in Samui, or they're up north in Chiang Mai, we can deal with them remotely. They don't need to visit our office. Everything can be done remotely, so it's easy for people to work with us.
And the low tier where there's no, I guess it's for the people who don't have tax liability, is I think $7,500 to file or something like that. So that's very doable if somebody does have the obligation, because their sourced income falls under that, but to be able to go in, and that would also that price point on it, does that also help them out if they with these tax allowances?
So we guarantee all our accountants are authorized and regulated by TFAC, so the Federation of Accounting Professionals in Thailand. So we guarantee that if people work with ourselves, they will get the maximum allowances and deductions that are available to them, so that we'll claim for those. If people need to claim for tax credits, let's say they've paid tax in the other country, where their jurisdiction where their assets are, just remember, it's important, JC, that it's not the nationality, it's the jurisdiction where their assets are. So if they've got a pension in Sweden, but they're from Spain, we're interested in the Swedish Thai double taxation, not the Spanish one. Because it's where your assets are. If you've got assets in Singapore, we look at the Singapore Thai double taxation agreement, not their nationality. So we can claim tax credits for people so that they don't, a lot of people, they've got a Thai tax filing obligation. They bring in a fair amount of money, but we know that they've paid more tax overseas than what the tax is due here. So we file the tax credits. This is our middle service, the assisted filing, so we have a service for this as well. And then we have our expert filing, which includes one-on-one consultations and tax planning and real hands-on with the accountant that will be filing for them. So with every level available for different types of people.
Well, that's good. What would they need to get in hand before they contacted you all that would make your job easier and make it easier on them as well? What before they inquired or you're going to help them out, what would they be asked for in the inquiry?
All right, okay, yeah.
So that they can have that on hand when they contact or you all contact them back.
Yeah, good question. So if, for example, they book in a 15-minute consultation with one of our colleagues, it's usually Jason that does these calls, then he'll just ask simple questions like how many days have they been in Thailand? What are they bringing into Thailand? What are the sources of income? How much have they brought in? If it's investments, then we'll look at the capital gain. So how much gain is there on those investments? If it's pension, we need to know what type of pension and where it is, because obviously that's important, JC, because depending on the double taxation, if it's social security, we know it's not taxable. Right. So it's really important. It's just basic information. They don't really need to prepare. Right. You just need to have a good idea of what they've brought in, how, what the source is really, and then we can help answer simple questions for them. Yeah. Really help people understand the rules. All right.
Well, that basically covers what I wanted to say. If you have any closing comments that you would like to say about the company or about anything that you think is helpful, then feel free to do so before we close this up. But before we do that, I do want to thank you for your time and everything. And it's been very informative and very helpful, and I think this is going to be of a lot of value to people. You know, we have a lot of subscribers. I think we still have 30,000 subscribers or something on our channel. Then I'm sure most of them, if they're here or thinking about coming over, this pertains to them. So I think this has been really helpful. But if you have any closing comments or anything, go ahead and feel free to.
I do. So I think really when we're looking at the tax in Thailand, rather than me talking about the company, I think it's important just to explain that we're here to help people understand the tax rules so they can make better informed decisions. So it's really important that people can really get a good feel for, do they need to file and how does it look for them individually, and then they can make their own decision how they work. So rather than me promoting my company, all I'd like to say is we're here to help. If they would like to free consultation so they can understand the rules. We've got a lot of content out there so that they can actually learn themselves what they need to do. So yeah, we are here to help, JC, and hopefully this has been useful.
Yeah, I'm sure it has. Well, thanks again for your time and effort, and again, I'll put the link and information how they can get in touch with you all in there. And you said if they use that link, they'll get put on the newsletter. They'll be put on.
So they'll get the tax alert. So any changes, they will be kept up to date, because it's looking like that the Thai Revenue Department, with common reporting standards, will move forward to being a worldwide taxation or territorial taxation basis. We don't know how that will look, but it's important that people are kept up to date, and they don't need to listen to rumors. We'll help them understand from the Revenue Department themselves exactly what the rules are. And then we'll keep them up to date with our webinars and events that we put on for people. Very good.
Well, I think people should stay up to date for sure, because I've been here now living full time like 27 years, I think, and the changes that happen. I always say they shoot first and ask questions later, and so you really need to stay up to date as to what they're proposing, what they're not, and if it gets carried through to the point where it actually becomes a rule or a law. They need to be aware of that. So great. And so the key points here is, even though some of this sounded a little bit complicated because of when your money comes in, what sources and everything, it really is a little bit simpler than I guess the key point here is don't worry.
Yeah, that's exactly right. Yeah, most people don't need to worry.
People are stressing out over this. They really are, and I think a key point here is, don't stress about it. There are options, but be informed. And this is why I say reach out for a free inquiry, or a free consultation, just to know where you stand. And from that point on, unless your circumstances change, you're good to go, right?
Yes, exactly right.
All right. Well, for Carl and JC, this is us signing off. Thanks for watching, and make sure to subscribe and comment, and think about our membership site as well. So, see ya. Hey, JC here. If you like that video, make sure to give us a thumbs up and subscribe to our channel here. Also, we have another video up here you're going to be really interested in watching as well. And if you're looking for all the details of how to retire in Thailand in one place, plus a group of people to support you, check this out over here. Give it a click.